Hey guys, what's up? I'm Erin and welcome back to the channel. Last week, the Federal Reserve lowered interest rates by 50 basis points using expansionary monetary policy that they haven't used in over 4 years' time. This brings interest rates to a target range of 4.75% to 5%. And lowering interest rates signals that inflationary pressures are getting under control after peaking in 2021 and 2022. Prior to the September meeting, which took place on the 17th and 18th, there was a very clear and collective understanding that the Fed was going to announce rate cuts. But we didn't know if they were going to do a modest cut of, say, 25 basis points or a more aggressive cut of, say, 50 basis points. Following the meeting, we know that they chose the more aggressive option. And following the announcement of the Fed's official rate cut, I feel like there was a flood of people in the finance space saying that the Fed just flipped the stock market and what you need to do to prepare. And anytime the Fed announces a rate cut or a rate increase, I feel like we tend to see these headlines. So I thought it was worth taking a moment to consider what it actually means when someone says the Fed just flipped the market, and to see if that's what they actually did. Now, when we say that the market flipped, it generally refers to a sudden or significant change in the market direction or sentiment. And this could be taken in a couple ways. First and foremost, it could be a shift from a bear market to a bull market or vice versa. So if the market had been trending downward for quite some time, and then we say that the market just flipped, well, now it would be trending upward. And the opposite is also true. If the market had been trending upward for quite some time and the market is said to have flipped, it would now be trending downward. I feel like anytime we see this language of the market just flipped, there's an action attached to it. So it's usually something like the market just flipped, what you need to do, or the market just flipped, how you can protect yourself. I feel like this is really more of clickbait nature because you end up asking yourself, okay, what the heck is a market flip and what do I need to do to react to it? As a long-term investor, the best thing you can do is really avoid these catchy headlines, things that scream the market just flipped and what you need to do about it. Because what you need to do about it is really nothing. You just need to keep doing what you are already doing. Stay invested and keep investing at your regularly scheduled intervals. But that doesn't make as catchy of a headline. I get it. There is another context in which we could talk about the market undergoing a flip. And that could be with regards to consumer sentiment, because how consumers feel about the stock market and how consumers feel about the economy has a huge impact on the overall economy and the market performance. When consumers are feeling really great about the economy, they tend to be very bullish on investments, and the market tends to trend upwards. On the other hand, we can consider a very negative event happening. Think back to 9/11, when suddenly there was a shift in consumer sentiment. When the terrorist attacks of September 11th, 2001 happened, the market suddenly closed for 4 days. Once they reopened, the Dow Jones dropped more than 7% the first day it reopened, and that was one of the biggest single trading day drops in history at the time. Consumer sentiments and concerns are absolutely reflected in the stock market. Now, the Fed did a rate cut, and this will have or signal both positive and negative impacts or risk factors. As the Fed starts to lower interest rates, we tend to see investors more drawn to higher risk assets like stocks. So the stock market often gets a little bit of a boost, and this is actually what we saw on the heels of the Fed's meeting. Was this boost enough to say that the market has flipped? I don't think so. The market has had a great year thus far. Yes, we did notice a little bit of a boost following the meeting, but I don't think the market flipped. Now, why stocks tend to be a little bit more attractive once the Fed starts to announce rate cuts is because things like high-yield savings accounts and CDs and money market funds and bonds now have lower rates, making them less attractive to investors because many investors are simply seeking out their highest possible return. So if there's a lesser guaranteed rates on these secure vehicles, they might start to funnel more of their money into the stock market. I do think it's worth mentioning the intentionality of your dollars. Like the dollars you keep in a CD, you probably have a very different goal with than the dollars you keep, say, invested in the stock market. So you want to keep in mind why your dollars are invested in various places and make sure to keep a balanced portfolio that meets your needs. One of the most attractive points of the Fed lowering interest rates is cheaper borrowing costs. Most recently, we have seen, at least from a historical standpoint, very high interest rates in terms of mortgage rates, auto rates, and even interest rates on credit cards. So as the Fed starts to bring down this benchmark rate, we'll see that mortgage rates and other interest rates will follow suit. And this will encourage consumers to go out and spend more because this lowers the cost of borrowing. When it costs less to borrow money, consumers are more willing to borrow money. Everything gets a little bit more affordable. So this action encourages consumers to go out and spend more, and this kind of gives a little boost to the economy. Consumers and investors often interpret the Federal Reserve's rate cuts as an improvement in economic outlook. It signals to the nation that the Fed is confident that inflation is getting under control and they're ready to encourage some economic growth, rather than putting the brakes on the economy, which is essentially what they're doing when they increase interest rates and then hold them at a higher level. And that's what we've seen for the past couple of years. So this is a very positive signal, and that in and of itself is positive for the market, and so the market can get a little bit of a boost from that. On the other hand, a rate cut can also signal that the Fed has concerns about certain areas of our economy. And specifically, the Fed has commented on our weakening labor market. So these rate cuts do signal that they're shifting their focus to help bolster this segment of the economy. Unemployment rates have been increasing, and job seekers have been saying that it's harder and harder to find positions. Rate cuts encourage consumers to spend more, and it also encourages businesses to spend more. And hopefully, as consumer demand increases, this increases the demand for businesses to hire workers. So this helps with unemployment. It's also notable that these rate cuts are coming just prior to our nation's presidential elections, with the intention to help bolster the economy through the end of the year. As the Fed policymakers also signaled that they expect to cut their key rate by an additional half point in their final two meetings this year in November and December. The Federal Reserve Chair, Jerome Powell, had made it very clear that rate cuts were anticipated at the September meeting. All of this was put out there before the meeting was even held, so the market already had this information. We were just waiting to figure out just how much the cuts would be. It's just like we know that future rate cuts are coming from the November and December meetings. So because the market already had this news, much of the effects of this news was already priced into the market. So we didn't see a really big reaction with the stock market because the market already expected rate cuts to be announced. Already knowing this means that there was no shock value, which is why when you see headlines like "the market just flipped because of the Fed's actions," I feel like the intent with that is clickbait or more shock and awe rather than actual news. Following these rate cuts, we have seen that the market has still tended to trend in an upward direction, which is very much in line with how the stock market has been performing this year. So read, the Fed did not flip the stock market. In the near term, we may very well see investors funnel more dollars to the stock market and away from investments like CDs or high-yield savings accounts and T-bills as the interest rates on these accounts decline when the Fed makes their cuts. But long-term, how the market performs really depends on what happens in the economy. Yes, the Fed is saying that inflation is getting under control, but we still have a lot of consumers saying that inflation is hitting them really hard. And hopefully these cuts in interest rates help to bolster the job market, but only time will tell. So what happens with the stock market really depends on how things play out long term in the economy. We know it is time to recalibrate our interest rate policy to something that is more appropriate given the progress on inflation. We're not saying mission accomplished, but I have to say though, we're encouraged by the progress that we have made. The US economy is in a good place, and our decision today is designed to keep it there. My hope is that no matter what the headlines are, no matter if the headlines read that the market is just about to flip, or no matter what the news is coming from the Federal Reserve, that you keep to being a long-term investor. Zoom out on the stock market graph. Look beyond 1 year or 5 years. Look at the max. It doesn't matter if there are times when the stock market has flipped. What matters is that you notice the trend long term, and that trend is that the market goes up. So best course of action is to simply stay invested. So what are your thoughts on headlines like "the market just flipped"? Leave them in a comment down below. I post new videos every single week. If you got anything at all out of this one, please give it a like. If you're new here, please consider subscribing, or if you know of someone who might get something out of this type of content, please consider sharing. I'll see you soon. Bye. Lowered interest 5 basis points, scheduled intervals, because I was so close. but I certainly don't think it flipped. That's annoying. Encourages consumers that's grammatically incorrect. Rate cuts do come that was a lot of unnecessary words. Fed just flipped the market. Savings accounts, nope. In the near, so what are saying that interest